Hi traders, thanks for tuning in. Take a look at the graphics here on the left side. You can see this trader jumping over the down and up trend signals. And guys, this is going to give you a big clue as to what this video is all about. It is the number one entry consideration. You're ready to take a trade. You're itching to click on the buy or sell button. You're anxious to make money, but you're fearful of losing this next trade. So, what do you think is the number one entry consideration as you think about taking the trade? Well, some traders think this is the easiest part of trading. Others are led to believe that it's the most difficult element of trading as they're consistently wrong. And some traders are so fearful that they often talk themselves out of taking the trade. The entry can be tricky to most traders. You see a buy on the chart and take a buy trade only to be wrong. You see a sell on the chart, take a sell trade, only to be wrong again. Okay, what is the number one decision, the entry decision that gives traders a lot of anxiety? This is the part. This is the part that I'll cover in the mini lesson in today's video, and we'll also review last week's trade signal. Okay, guys, this is me for the new subscribers to this channel. And for those people who just want to keep seeing my photo over and over again, well, this is me, guys. My name is Martin, and I'm a proud Canadian trader. You can take a look right here. And if you want to contact me and get my free trade signals, just send me an email to this one right here, to my email, mskyj007@gmail.com. I'll have more info on this later on in the video. Okay, before we start, guys, this is my humble disclaimer. My free trade signals is an educational program only. I'm trying to teach you how to trade correctly and not give you any specific investment advice. It's your responsibility to evaluate the relevance of my advice and content. Don't blame me if you lose all your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions. Now, since we're trading with real money, only risk a maximum of 1% of your account balance. You can trade with a little bit more if you're more experienced, but guys, try to keep it to 1% if possible. And for the new traders out there, trade only on a demo account only for at least next couple of months until you fully understand what my free signals program is all about. Okay, let's take a look at this week's trades, guys. We took 3 new trades this past week, and I want to start off by talking about some trades that continued over from the previous week. So from July the 20th, I issued a buy USD Swiss franc trade. It was a loss, guys, for approximately 54 pips, and we contained the loss because price crossed below and closed below the DTL line, which stands for the dominant trend line. Okay, during this video you'll learn more about this, and this is really important. Now, also from July 22, which is from the previous week, I issued a sell signal, the Euro USD, guys. This was also in a loss, and this one was contained for approximately 74 pips. It also crossed the DTL line, which tells us to get out of the trade. So in total, guys, we had a total loss of 128 pips. It's probably my worst week so far in almost a year of trading. But we are in the summer months, and guys, trading is very erratic at this time of year. Now, the brand new signals I did send out on July the 27th, I issued a sell Australian Japanese yen trade. So it was a sell Australian dollar against the Japanese yen. It's still open, guys. I want you to keep it open. And on Monday, we'll see what happens. But right now, we are in a profit position of approximately 22 pips. So it's going in our direction, and I feel it's going to continue going down. On July the 29th, we have a buy Australian dollar USD. And guys, sorry to tell you this, but this really is a no trade. I'm going to cover this in an important lesson in this video. So you have to watch the video to see why I'm not issuing, well, why I issued the actual buy trade, the buy Australian USD, but it is a no trade, and there's a reason why I'm not going to consider this as a valid trade signal, okay? And then finally, I did issue a buy gold versus the USD. XAU stands for gold, guys. It's still open, okay, and I still expect price to go higher, so we keep this open for now. And again, I'm going to review all these trade signals in just a moment. We're going to look at the charts. We're going to look at the entries, the stop loss, the take profit level. So you're going to get all that. Just bear with me in just a couple of moments, okay? So again, with these two losses here, we have a loss of 128 pips, okay? But again, the important thing is we did contain the losses, okay? Now, here's the very first one. This is the carryover trade from 2 weeks ago. The buy USD Swiss franc. It was sent to you on July the 20th, guys. Here, over here, you can see is the actual information I sent to you in an email. Okay, guys, again, this is the buy USD Swiss franc. Here's the entry at 0.9213. So it was based on the signal right here. You can see on this white bullish candle. And I asked you to take a buy trade here at the close of this candle, which is 5 p.m. Eastern Standard Time, New York time zone or Toronto time zone. Because we are in the same time zone as New York City. Anyways, this is the entry right there, guys. Let me just remove that. And you can see the next day price did come down. It did come down substantially, but I did issue out an update, guys, and you get all of this free with my free signals program. On this day after the candle closed, I basically said keep the trade open. On the next day, you see it went up again, and then the next day it went up, went all the way up. You can see with this black upper wick here, it did go past our entry, but then came back down again. And I just kept saying keep the trade open. I thought for sure that the USD was going to gain strength because it had gained. Take a look back over here, guys. It had gained a lot of strength. And it is gaining strength as the economy strengthens in the U.S. So I thought that price was going to go up higher and did not. And you can see on this particular day, price went down with this black candle. It crossed the DTL line. You can see that right here. The DTL stands for dominant trend line, and it is for now a 21 EMA moving average. Okay, so it's a 21 moving average, and on this day, once price closed, crossed below and closed below the DTL line, we automatically closed the trade. And so that's what happened. We had a little bit of a loss, but guess what, guys? We contained our loss to right here instead of letting it go all the way down further. Okay, so again, thank you very much for following my instructions. And guys, let's get on to the next trade. Okay, and that is the sell Euro USD. You can see that right here. Here was the signal on this candle right here. Well, there's the signal. And you can see price is below this DTL line. This is the dominant trend line. Okay. And here's the sell signal at 1.1770. So it's at the close of this black candle right there. And I thought price would come down, and I did give you a first take profit target, a second take profit target. In fact, the next day after this, it did reverse above and go above this short-term trend line. However, at the same time, I said keep the trade open. And we keep it open until it goes across the DTL line. It did with this candle right here. And you can see that we closed it also with a smaller loss. This is our original stop loss right here at 1.1863. So with this crossing of the DTL line, price did not go as far as our original stop loss. But anyways, we did close it out, and we did limit the loss. So again, it's important to understand that this is part of our money management control system. Okay, so let's get moving to the next trade, and this is the very first signal of last week. Okay, and you can see right over here, guys, the entry I gave you, 80.74. Okay, right here at the close of this candle, right there, I should say, this black candle. Okay, and the next day went up, kind of a resting candle here. I basically said on this day I gave you the update, keep the trade open, as I believe the price would still come down further. The next day it did come down, closed right there, and then finally, guys, on the Friday, the last trading day of this week, price did come down and is now below our entry right there. There's our entry. Price is now lower. It hasn't come down yet to hit our first take profit target of the 80.28. So I expect that to happen either on Monday or the beginning of the week. And so keep this trade open till then. Okay, so congrats for following the instructions and keeping this trade open. So let's continue now with the next one. I'm going to call this tough love, tough teaching, because I need to teach you correctly. Okay, so the trade, here's the information on the free signal, guys. It was a buy Australian dollar USD. There it is right there at the close of this white candle, guys. There's the signal, okay? However, what is wrong with this picture? Okay, just take a look for a second. Even though we have a signal and we have a white bullish candle and the trade I did send out to you, buy Australian USD. I gave you the entry, the first take profit, the second take profit, guys. Here's our stop loss right here. Okay, well below the entry. So what is wrong with this picture? Just take a look, guys. Okay, well, first of all, and you know, I've been trying to teach you simple trading, very simple trading. Let me just take all that off. First of all, can you see that price is below this line? Okay, this line is red or magenta. And guys, when price is below this line, we're only supposed to take sell trades. And I've said this to you many times over and over again. That's one of the biggest rules in our trading, and it's part of our video, our lesson, our mini lesson in this video as well. So when price here is below the DTL line, which is the 21 moving average, it's the 21 EMA. When price is below, we don't take buy trades, we take sell trades. Okay, sell trades. Okay, and keep that in mind. And this lesson, I'm going to show you how to correctly, again, look at the trend and know which direction you're supposed to trade, regardless of the candle that you see. In this case, it's a white bullish candle. That does not mean you take a buy trade. Okay, so that's what's wrong with this picture. Sell trade only, guys, when price is below the DTL line, the dominant trend line. Okay, let me take all of that off, and this is the second confirmation, guys. And do you remember? Now, this is for those traders who follow my videos every single week. Do you remember what last week's video was all about? Okay, let's take a look here. It was about seeing price on the bigger time frames, seeing the big picture, and that was the title of last week's video. If you haven't seen it, guys, it's so important. Go back to my last week's video and watch it, okay? Because that's the whole point. I'm trying to give you life-changing education where you can become a trader on your own without having to follow everything I say and do. Okay, but the buy Australian USD, it was this false signal, right? This is the daily chart. You can see price is in a downtrend clearly. Price is, let me just take a look here. Okay, price is making lower lows, higher higher lows, lower lows, higher lows, lower lows. Okay, so this is the definition, basic definition of a downtrend. And guys, price is below the DTL line, which is also red or magenta. And guys, I gave you this indicator. I told you to put this on your charts many, many times in the past. All of you should have the 21 EMA on your charts, okay? So now we go to the weekly charts, and last week's video I said always switch to the next higher time frame. And guys, we're trading on a daily candle, so the next higher time frame for us is the weekly, and you can see definitely the entry. Okay, let me just mark that. The entry was again that I sent to you 0.7388, right? So there's the entry, guys. Okay, and you can see the first take profit, second take profit, but in fact then price went down. Okay, and the main thing is right here, price. This is where we got in, guys. Price is below the DTL line. You see the DTL line here. It's an uptrend here, but in a downtrend. So price is still below the DTL line, and we don't, or we cannot take buy trades. Okay, and that's why it's a false signal, guys. I wanted to test you guys to see, if you remembered last week's video on seeing the big picture, which, and in this case here, price is definitely below this DTL line, below the downtrend line here, guys. And so you're looking at only sell trades. You're not looking to take buy trades. Okay, so that is that. And again, back on the daily, you can see we're in a downtrend. It's really clearly still below the red line. So again, we're only looking at sell trades, not buy trades, guys. So I kind of tricked you. I know that we're playing with real money, but guys, I need to teach you this very, very important, valuable lesson. Okay, and pay attention, watch my videos, and don't make this mistake. Okay, so if price is below the DTL line and it's magenta, then you're taking sell trades, no matter what I say or no matter what you're thinking in your mind. Now, I'm not going to do this in the future. I won't trick you anymore. I know we're trading with real money, but guys, you've got to pay attention. Okay, and this is what's called tough love. Okay, so you're going to learn, and you hopefully you won't make this mistake again. Okay, so let's move on, and then let's take a look at the last signal I gave you. And this was a true signal, guys. You can see we got in right here. Okay, right at the top of this candle, the close of this white candle at 1828. Okay, I expect price to go higher. This next day, price did come down. Okay, don't worry about it. It's Friday. I still expect price to continue going higher from here. If it goes down lower and crosses below the detail line, guys, what are you going to do? Well, you're going to close the trade, right? Because that's one of our rules. Okay, so, but this is a legit trade. I took the trade, guys, and I'm looking to see if it goes higher this coming week. Okay, so that's it. Let's get on to our mini lesson. And the number one entry consideration, guys, okay, is the trend direction. And every time you want to enter a trade, you're going to be asking yourself, should you buy or should you sell, right? Okay, so let's take a look here. There are critical 4 W's questions, okay? W's are, what is the market doing? Who is in control? Where is the market right now? And when can you consider a trade entry? This is how you can anticipate a trade setup, and your strategy can help you do this. So before you take every trade, every new trade, this is what you need to know. You need to ask yourself the questions. They're called the 4 W's because you can see these each question starts with a W. Okay, so let's take a look. Okay, here, guys, kind of a bit of a quiz here. Price is coming down. Okay, you can see what's going down. You can clearly see prices in a downtrend, right? And I want you to look right here. This is the hard right edge. All of a sudden, we had a big, huge white candle, a small little resting candle, and then a continuation white candle. So price is clearly in an uptrend. I want you to just look over here and let's ask yourselves the 4 questions. What is the market doing? Okay, basically we can see that price is in a downtrend, okay, overall, right? Who is in control? But right now, okay, you can see who's in control are the bulls, right? The buyers are in control because they've now reversed price. Where is the market right now? Okay, right now it is the buyers, okay? So here the sellers were in control, buyers are trying to take control, right? And when can you consider a trade entry? Well, the real answer is you need to verify and qualify these last candles, these white candles, and you need to confirm that indeed, are we starting a new uptrend from here, or will price still continue to go down? So this is what the indicators and our algo strategy will tell you what to do. And the easiest way to understand exactly what's going on and in which direction to trade is by applying the dominant trend line. Okay, so let me take that off just for a second, and we're going to get to that. We're going to show you the same chart with the dominant trend line. So prior to every entry, you need to know the overall dominant trend direction. This is the starting point for all of your trading decisions. Your first trading tool is a simplistic single line moving average indicator, giving you both the market direction and acts as the main indicator for all your entry signals, right? So let's take a look. This is the exact same section as as here. You can see, okay, we're taking a look right here at the hard right edge. You don't see the candles to the right side, okay? And then we get to right here. So this is the same area. And you can see I've now put on the dominant trend lines, the 21 EMA. Okay, it may change in the future, by the way. I'm still looking for something that may be a little bit more smooth than this and give us a better indication as to market direction. But for now, 21 EMA, and I've given this to you, and I've told everyone to put it on the chart. So take a look right here. We're still prices here. It has gone above, but the line is still predominantly pink or red, guys. Okay, and it continues from this point. You can see price now has reversed and come right back down. So if you would have gotten in a buy trade, you wouldn't have gotten far. It would have reversed immediately, and you can see then that would have been like a false signal, right? So this is what the dominant trend line does. Instantly, it will tell you that you can look here and here and here. Price is below this red line, so we're only looking for sell trades. We're not looking for buy trades. When price here, you can see, is above the green line, we're looking predominantly for buy trades. So buy trades when price is above the green line, or sell trades when price is below the magenta or red line. Again, price reverses again. Guess what? Price goes down. Here, we're only looking for sell trades. Okay, and later on, because we're in the final phase, I'm going to be talking more about the indicators I use, and obviously all along the way here, we have actual entries where we can get into, okay, entries that will give us the trade signals, okay, and that will happen over the next few weeks. So you've got to watch all my videos every single week, okay? But right here you can see you would have gotten in falsely, price did reverse, and this is what and how the dominant trend line can help you, okay? So let's take that off. And let's look at the next slide, guys. The higher time frame trend direction. Now, I want you to go back here. So not only do you look at price on the daily time frame, but your real confirmation, you've always got to check in with the higher time frame. So these are candles on the daily chart, Then take a look right here in this section. You can see these 3-4 white bullish candles. Okay, this section right here is this candle right there, guys. This is on the weekly time frame, and guess what? It is below the pink or magenta red line. Okay, so if you would have tried to get in here on this candle on the weekly time frame, you would be wrong, because it's clearly telling you not to take a buy trade. It's telling you that you cannot take buy trades. You can only take sell trades, okay? Because price is below the red dominant trend line. Okay, so that is the lesson, guys. In summary, for the entry direction, always, number one, trade in the direction of the larger time frame, which is weekly. Okay, guys, we're trading on the daily. That's our entry chart. That's where I send the signals, and you always enter on the daily chart, but we always want to check with the weekly and trade in the same direction as the larger time frame, which in our case is the weekly. So for intraday traders, and if you're day trading, if your entry chart is, let's say, the 15-minute chart, you may want to look at the hourly chart as your overall higher time frame. Okay, so number two, for an uptrend, price is above the green DTL line, the DTL dominant trend line, which is the 21 EMA. Okay, please understand that. Put it on your charts if you haven't done that already. So 21 EMA. For the downtrend, price is below the magenta or red DTL line. Number four, candle has to be fully closed. So before you take an entry, you want to wait till the candle close. And we're trading on the daily time frames, guys. You got to wait for the daily time frame candle to close, which is at 5 o'clock Eastern Standard Time, New York time zone, Toronto time zone. Okay, so wait for the candle fully close. If you're intraday trading or daily trading, during the daytime or scalping, you still have to wait for a candle to close, because anything can happen in the last couple of minutes of the candle. It could reverse completely, and so what you thought was you're going to take a buy trade is now looking bearish. Okay, so always keep that in mind. I don't care what time frame you're trading on. Candle has to be fully closed. So have the patience and wait. And finally, number five, confirm your entry direction with other elements of your overall strategy algo. Okay, so this is truly important. And I know that we are using the dominant trend line to get in our trades, but now we have to confirm any entry with our other indicators and our overall strategy. Okay, and that is important. There's always a few elements involved when it comes to getting into a buy or a sell trade. Okay, and so that concludes our lesson, guys, for this week and this video. If you want my free trade signal, send me your email address. I'll put you on my VIP list. Okay, and when you send me an email, guys, give me your first name. It's important. Give me at least your name and tell me what country you're from. I'd love to know where you're from. Okay, send your email to mine right here at mskyj007@gmail.com, right here, mskyj007@gmail.com. I'll put you on my VIP list. There's no charge, there's no cost, no credit card. I'm not going to ask you for any money, anything like that, guys. I'm sending out my signals to quite a number of people from around the world, guys, and you will also receive them as well. So this is it. This is goodbye from me right here. Again, my name is Martin. Cheers from Canada. Don't forget to subscribe. Hit the subscribe button below and the bell, which gets the emails to your inbox. Okay. And finally, click on the like button, guys. I really appreciate that. If you think you've learned something in this lesson, it was a bit more basic than some of my other lessons, but guys, it's all important. I'm trying to remind trying to give you reminders as to how you should trade and to have the patience, guys, and trade in the general direction of the overall larger time frame trend. Okay, so hit the like button, guys, and give me a comment. You can send me a comment as well. I'll get back to you as soon as I can. Take care. Bye for now, and we'll see you next week.